Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. And Daily Dose of Market Insights has resumed this week after a week long of break. So, very good morning to all. I'm Kelvin here. Welcome to a brand new trading week. Today will be the 17th of November, 2025. So, as usual, before we jump straight into the gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses may not be suitable for everyone. Pardon me. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so as usual, before we jump straight into that full suite of daily dose today, which covers the all the intraday technical outlook on all the broad-based cross-asset classes, 12 of them in all, ranging from the FX, the major stock indices, and the two commodities market, which cover on the frequent basis, which is Gold XAU/USD and West Texas crude oil. Let's have a quick recap what has taken shape last week. I will not go through in detail of all the event last week, but some of the events and economic data releases that potentially impact the movement of the broad-based cross-asset classes, and as well as key data to look out for today. All right, so last week is a rather volatile session. Even though I was away, I managed to take a quick look at it during my off-peak period. So yesterday we see last week we see a rather whipsaw movement in the major US stock indices. Let's start with the US stock indices first over here. Okay, let me go through my screen. All right, so we know that on Thursday there was actually a sell-off in the US, the major US stock indices. So if we look at my chart over here, very quickly taking a look at the S&P 500. Right over here. Right, so on S&P 500, starting on Thursday, we have a sell-off, and that sell-off actually continued at the start of last Friday US session. And what's interesting over here is that that sell-off that kickstarted on last Thursday managed to survive right exactly again at the 50-day moving average, where previously on the previous Friday on the 7th of November, it managed to stage a bullish reversal candlestick pattern called a hammer. And on last Friday, which is on the 14th of November, it managed to actually stage another bullish candlestick pattern right exactly after the challenge of the 50-day moving average again. And if you were to look at the S&P 500 heat map over here, the leadership that managed to create that rebound on the S&P 500 has been centered on the semiconductor stocks, primarily on NVIDIA, that is up by 1.77% on last Friday. And if you look at the 1 week performance of the S&P 500 component stocks, the market leader has also been centered on various semiconductor stocks. NVIDIA up 1%, AMD up by 5.7%, Microsoft 2.79%, and Apple 1.5%. And we know that Microsoft has also been driven by this AI related team play after its significant shareholding in OpenAI as well. And for sure, NVIDIA is the AI juggernaut that's providing the higher end GPU semiconductor chips to this data center that is running on these AI models, okay, data-driven models. And what's interesting over here is that the bounce on the S&P 500, i.e. the rest of the major US stock indices, came on the, we call it, came or realized as NVIDIA Q3 earnings loom this week. All right, so this week we have a key risk event, and the most important event is one of them will be NVIDIA. So we'll go that we'll touch on this day by day as we approach. So very quickly, since we talk about NVIDIA, so NVIDIA earnings will be released, Q3 earnings on the 19th of November after the close of the US session. So 19th November US session closed. That means i.e. Singapore time will be 20th of November. after 4 a.m. at roughly 4:01 a.m. Singapore time. So what's interesting over here is that before NVIDIA news release, what NVIDIA earnings result release, NVIDIA is very important because it's the AI juggernaut, and this AI juggernaut is leading this AI team play that has been on the forefront of the US stock market rally since 2 years ago. And if NVIDIA continues to show a stellar earnings performance, and that potentially could be reflected in its share price. So the share price has really started to reflect it in anticipation of the earnings on last week. All right, so if the share price is going to shape a positive feedback loop, potentially it could allow the medium term and major uptrend phase on the US major stock indices to remain alive over here. So right now, we're talking about the US stock indices over here. We know that last week, the star performer is not Nasdaq, it's in fact the Dow Jones Industrial Average. So very quickly, if I could actually share with you the chart of the Dow Jones Industrial Average over here, which is in our platform, the US Wall Street 30, which also hit our resistance level before I went for a 1 week break. So over here, this is the Dow Jones Industrial Average. So the Dow Jones Industrial Average managed to hit a fresh all-time high on last Wednesday, which is up to 48,431, thanks to its highest or biggest weightage component stocks, which is Goldman Sachs, which rallied about 3.5% on Wednesday, and as well as on Tuesday as well, it did a stellar return. So that causes the Dow Jones to actually outperform last week and managed to scale to a fresh all-time high over here. All right, then with that, that will be the major US performance of the stock index, and we know that there's this kind of anticipation of the US government reopening. So the US government managed to reopen on Thursday officially. So this also created that kind of what I call buy the rumor, sell the news kind of thing. So right upon the official signing off by US President Trump on Thursday, where he allows the US government to reopen after the longest period of modern historical shutdown. I think that's what, close to 43 days, where the US government shut down. Then that created that buy the rumors, sell the fact syndrome that is being inflicted on the US stock market, where the on Thursday, last Thursday, across the board, we see a sell-off in the US major stock indices. But what's interesting over here is that with the release of the we call it, with the slow delayed release of government official statistics, there was this particular news flow over here. Let me put it up for you guys to see. Okay, where is it? I think this should be the news flow. 1 second, we put it up. Okay, so this is the official sign off by US President Trump. Record US government shutdown ends as US President Trump signs the spending bills that took place on Thursday. And also, what's interesting over here is that the US White House administration announced that it could be a chance, or there could be a probability that the October jobs and CPI reports are unlikely to be released. All right, so they were released September 1, but the October reports were unlikely to be released. So with this a missing piece of key US government official statistical board compiled data, that potentially could lead the US Federal Reserve to be in a blind spot of not having enough data to justify another interest rate cut that could be potentially the third cut that's being priced in earlier by the market participant, close to about 70% before this news flow has been released. So that actually created a liquidity, we call it tightening, we call it effect, and also created that negative feedback loop into the US stock market. So if you look at the, based on the latest pricing of the the Fed Watch, CME Fed Watch 2, where it takes into, sorry about that, where it takes into account of the latest price section of the Fed Funds futures traders. Let me reduce this right over here. So you could see over my screen over here is that the current rate is at 3.75% to 4% after the second cut this year in the previous meeting. So previously, market participants are expecting the Fed to cut 25 basis points, 3.75% about 1.5 weeks ago, where previously, if you look at 3.5 to 3.75%, the rate was about 70% a week ago, and a month ago is what, 88%. And based on the latest probability right now, it now has been greatly reduced to below 50%, which is at 45.8%. All right, due to that news flow that's stating that the October job data and the CPI data may not be released. So that created a official data vacuum for the Fed to justify an interest rate cut in the month of December. So that actually greatly reduced by 45.8%. And if you look at the aggregated tab, where we're able to see the pricing for the various meetings ahead, including into the meetings stretching up into 2026. So if we look at, we start to see a high just because of that what I call a vacuum of data for the October meeting. But going forward in 2026, market participants are still expecting three interest rate cut, because the initial expected two interest rate cut, two interest rate cut for 2026, because initially that expected rate cut in December has been reduced right now to 45% or 45.6%, and market right now trying to actually price in two interest rate cuts into 2026. Okay, my mistake, two interest rate cuts only. So we have 87% chance will come in the 17th of June 2026 over here, and also 82% chance another cut will come in on the 16th of September 2026. All right, so this time around, because of that lower expectation of the third cut to come in 2025, before 25 ends. So right now, by 2026, market expectation only the Fed funds rate to end at 3% to 3.25%. By the time it hit 9th of December 2026, instead earlier of 2.75% to 3%. Right, because of this less than 50% chance that the Fed will cut in on the next meeting on the 10th of December 2025. So that has been a liquidity, we call it a shrinkage impact on the US stock market. But on the US, we call it FX rate over here, the US dollar. So it created a what I call a sideways movement of the US dollar. All right, so for the US dollar over here, things are relative in nature, because some country, we know that the ECB is likely to has more or less end its interest rate cut cycle. UK is facing this fiscal drama, where potentially due to we call it there's a potential chance that there could be removal of future interest rate corporate tax cuts. All right, so they may raise the tax to actually balance the budget. So that created a bit of what you call it whipsaw on the sterling pound. But nevertheless, if you put everything in aggregate on the FX market over here, so over here the FX market, what we could see is that the US dollar index hit a key medium-term pivotal resistance level at 110 and 150, which is the 200-day moving average on 6th of November. Then thereafter, it actually traded downwards and now managed to stage a bounce again right at the 20-day moving average, which is at 99.25. So I do expect that the dollar index is going to be trapped in this very messy sideways range configuration since the low of 1st of July this year. Okay, then gold also created a wild whipsaw over here. Earlier part of last week, it managed to stage a rally, but on Friday it did a massive sell off. So if you look at the gold price over here on last Friday, okay, this is the weekly chart of gold. Okay, so initially there was a rally at the start of the week, but however on Friday it actually sold off and ended it with a weekly shooting star candlestick for gold. And one of the reasons why gold sold off on Friday is because of the US 10-year Treasury yield has started to inch upwards due to that lower probability of a interest rate cut that is coming in the December meeting, and that potentially could actually reduce the probability of a more uniform interest rate cut cycle going forward by the Fed based on the latest news flow, where October non-farm payroll data and the October CPI data may not be released, which I shared with you guys earlier. So what do I mean by this? So if you look at this is the 10-year US Treasury real yield. So what I did over here is that I used the nominal yield minus of future 10-year inflation expectation as derived by the TIPS treasury market. So what I could see over here is that there is a push up and there's a bullish breakout above the 20 and the 50-day moving average on very clearly on 30th of October, and it continues to have a positive follow through on Wednesday as well. And on Friday, it managed to did a strong bounce of the 20-day moving average and now heading towards 1.87 key resistance level, which is very close to a 200-day moving average. So potentially this US 10-year treasury yield, after breaking above 1.87, it may go up towards 2.09%, and the long-term pivotal resistance at 2.29% and 2.37%. So this is very close to this upper limit of this ongoing long-term circular descending channel that is still in play since 23rd of October 2023. So that is about 2 years back, right, of major downtrend phase that is still intact of the in the US 10-year treasury yield. But in the short term, it may do that mean reversion rebound. And as you could see over here is that this push up in the 10-year treasury yield has been causing the gold price to remain lackluster since its fresh all-time high that is being printed on the 20th of October this year. Right, so one of the reasons why it lead to a lackluster gold price, because a push up in the 10-year US Treasury yield, a real yield, implies increase in opportunity cost for holding a long gold position. So right, so that actually explain the direct indirect correlation. Once you see the 10-year US Treasury inch up higher, opportunity cost increase for holding gold, and that created limited upside for gold at this junction. All right, so that sum up the first segment of the daily dose. So now let us move on to the second segment very quickly. Will be the intraday technical outlook on all the major cross asset classes, starting with the FX market. All right, so let me pull up the FX market for you guys to see. So with that, let me expand my screen over here. Give me a couple of seconds. All right, so I believe the screen is good. So now let us start with the euro dollar. All right, so before I went for a break, we do turn into a bullish bias on the previous 2 Thursday ago, where the euro dollar actually managed to bounce off and hit our resistance level. And right now, it's now showing signs of short-term exhaustion, right exactly at the 50-day moving average over here. And also very interestingly, the hourly RSI has also been start to show bearish momentum as well. So what I could see is that we printed a lower high over here after hitting the overbought level, whereas price action shaped a similar high in conjunction with the same period of being formed. And also right now it's staged a bearish breakdown below a parallel ascending trend line and has yet to hit the oversold region, indicating there is some form of intraday bearish momentum that has started to creep into the euro dollar. So with that, I will have a bearish bias for today to play a intraday bearish setback using 1.1660 as my short-term pivotal resistance level. Intermediate support level to watch will be at 115.80 followed by 115.60. A breakdown below 115.60 may see a much more deeper pullback towards 115.30. So if you do 115.30, if you do the Fibo retracement of this previous recovery from the low of 5th of November all the way up to the intraday high of last Friday, that also constitute very close to the golden ratio at 61.8%. Only a bullish breakout and hourly close above 116.60 will invalidate today's bearish bias on the euro dollar to see the continuation of the recovery towards the next intermediate resistance level at 117.20, which is the minor swing high area of 17th of October, and with the minor swing high area of 6th of October and 17th of October this year. Right, so that's for the euro dollar. Right, let me save the chart. next up will be the sterling pound over here. So the sterling pound also, the rally managed to get rejected at the 20-day moving average, and so very close to the upper boundary of this ongoing medium-term descending channel resistance that is still in place since 17th of September high. So with that, I'll be using the last Friday minor swing high that correspond with the 20-day moving average as well, which is at 132.20. So that will be my key pivotal resistance for today, 132.20. As long as it didn't surpass above 132.20, potentially there could be intraday weakness on the sterling pound to retest last week swing low at 130.95. So that was last week low. A breakdown below 130.95 may expose the next intermediate support at 130.50, which is so close to the golden ratio of that previous recovery from 5th of November low all the way up to last Friday high. That's the 76.4%, right? Pardon me. The 61.8% golden ratio is the 130.95 first intermediate support that we are watching for today's potential intraday weakness on the sterling pound below the 132.20 short-term pivotal resistance level over here. So if we start to have a bullish breakout above 132.20 and hourly close above it, today's bearish bias will be invalidated to see a further intraday recovery on the sterling pound to revisit the 200-day moving average that's confluencing with the next intermediate resistance level at 133 figure level over here. All right, so that's for the sterling pound. Onward next will be the Asia Pacific currency, starting with the Aussie dollar. So the Aussie dollar also managed to rally and hit the resistance level at 65.60 over here. So with that, now it managed to trade within the 50-day and the 20-day moving average again, so indicating a form of intraday whipsaw movement. So with that, I will flip to a neutrality stance on the Aussie dollar for today. No clear conviction of any directional bias. So neutral between 65.60 and last Friday minor swing low where it managed to stage a bounce, which is at 65.05. So neutral between 65.60 and 65.05 for today on the Aussie dollar due to its rather whipsaw movement between the 50-day moving average and the 20-day moving average in the last two sessions. All right. That now next will be the dollar yen. So the dollar yen last week pierced up due to some talks by the current Japanese Prime Minister, where she kind of advocate the Bank of Japan to adopt a much more accommodative monetary policy. So that created a push up above our key resistance level at 154.50 level over here, which is the major descending trend line previously linking the highs of 3rd of July over here. So what we could see is that there's this bullish breakout. That means, i.e., in short term, potentially there could be a continuation, a positive feedback loop holding above the 20-day moving average at the 153.40 level over here. So if you were to go down into the shorter time frame on the hourly chart over here, this is the hourly chart. So on the hourly chart, what we could see over here is that from the minor low of 29th of October all the way up to the current price action, this higher high and higher low seems to be forming in a kind of a bearish wedge formation over here. So indicating a potential residual push up, but this residual push up will be rather cautious going forward because of the formation of this bearish minor ascending wedge. So bearish minor ascending wedge is being formed by taking a look at this upper boundary and the lower boundary over here. So what I could see is that the slope of the higher high, the slope linking the higher high, is less steep compared to the slope of the higher low, right, linking from the low minus 3 low of 29th of October. So indicating that yes, it may bounce, but this bounce is uniform and it starts to form the slope of the higher high is less steep, or the slope of the higher high is more flattish compared to the slope of the higher low. So indicating also as the price action continues to oscillate within this potential bearish ascending wedge, the bullish momentum has starts to slow down due to the slope of the higher high has starts to be less steep compared to the slope of the higher low. All right, so we also got to be mindful what also created this movement of this bearish ascending wedge movement is also because market participants is fearful of potential intervention by some of by the Ministry of Finance over here, given the fact that previously, if you to look back in time in the daily chart, right, previously they intervened around this level over here at 158.35, 158.80 level that created this previous sell-off initially on July 2024 and created that sell-off again in January this year. All right, so that's why the fear of this intervention by the Ministry of Finance in Japan created this kind of lack of uniform upside channel. So it created a bearish ascending wedge instead. So, but however, in the very short term, it seems that from a technical perspective, this bearish ascending wedge still has some more room for further potential push up before it ends. And also the hourly RSI is also rather positive right now over here. So I could see it's managed to break out from a descending trend line, right, and has yet to hit the oversold level yet as for today. So for today, there could be still bullish momentum at play. So using last Friday low at 153.65, which is so very close to the lower limit of this bearish ascending wedge support level. So as intermediate support level will be slightly lower at this level here, 154.30, first support level to watch, maximum 153.65. So as long as price didn't surpass below 153.65, we saw confluence the rising 20-day moving average. We will have a bullish bias for today as the dollar yen continues to be involved in this bearish ascending wedge configuration. First resistance level to watch will be the upper limit of this bearish ascending wedge for today at 155.50. A breakout above it will see a steeper rally towards 155.80/155.95. Only a bearish breakdown below 153.65 and the hourly close below it will invalidate today's bullish bias on the dollar yen to see a choppy downward drift towards 152.95, which is the minor swing low of 5th of November and 7th of November. A breakdown below it will see further weakness towards the minor congestion area of 28th of October and 30th of October at 152.35 over here. So that sum up the intraday technical outlook on all the four major US dollar pair. Now let us now move on to the major stock indices, starting with the Asia Pacific markets with the Hong Kong 33. Oops, sorry about that. What is this? Okay, starting with the Hong Kong 33, representing the Hang Seng Index. So the Hong Kong 33 managed to shape that rally on last before I went for a short break over here, and it drifted downwards again, moving in line with the weakness of the US stock market on last Thursday. And right now it's fast approaching again the first support level that which I highlighted previously when I go for my 1 week of leave at 26,310. And the 26,045 remains the pivotal short-term pivotal support level for now over here. So with that, still no change. Still looking for a potential bounce after last late week sell-off over here. And also I could see is that the hourly RSI has started to shape a bullish divergence as well, as price action shape a lower low, but the RSI is moving in a different direction, a bullish divergence, indicating a slowdown of that bearish momentum that we're seeing right now. So with that, first support level to watch 26,310. Pivotal support will be at 26,045 to maintain that potential minor bullish reversal that could be installed on the Hong Kong 33. Resistance level to watch on the intraday basis will be 26,695 over here, which was last Friday US session high. Only a breakout above 26,695 will see a much more pronounced intraday bullish reversal to retest last Thursday's swing high at 27,100 before that minor sell-off took shape. Only a bearish breakdown below 26,045 and the hourly close below it will invalidate today's minor bullish reversal scenario to see another choppy intraday bearish movement to retest 25,760, followed by the minor range support level that has been in play since 23rd of October at 25,500 if 25,760 gives way. So that's for the Hong Kong 33, representing the Hang Seng Index. Next up will be the Nikkei, Japan 225, representing the Nikkei 225 over here. So the Japan 225 managed to survive above the 50-day moving average over here, and also despite on last Thursday's sell-off, it managed to hold above the previous short-term pivotal support level that we highlighted at 49,370, which is the minor swing low of 5th of November that managed to stage a bounce. So with no change, still using the 49,370. So it seems that it may be forming into a range over here, right? There could be a minor range that has been formed with the range support at 5th of November, range top that has been tested twice on 11th of November and 13th of November. So potentially now it's now hovering very close to the range support level. So with any potential movement down, as long as this shape did a bearish breakdown below the range support at 49,370, we'll be still having that bullish bias on the Japan 225, and also being supported by this upward sloping RSI that has been in place since last Friday. Okay, so indicating there is some form of bearish momentum easing off as based on this upward sloping RSI. So first resistance level to watch for today will be 50,730, which is close to the 20-day moving average as well. A breakout above 50,730 will see a much more pronounced intraday push up to retest the minor range resistance level at 51,530 for today. Right, only a bearish breakdown below 49,370 will invalidate today's bullish push up within the range scenario to see a deeper corrective decline to challenge the 48,450 medium term pivotal support level. Right, so that's for the Japan 225 representing the Nikkei 225. Next up will be the Germany 30. So the Germany 30 did a sell off on last Thursday and Friday, and where it managed to bounce, it bounced very closely. If we go to the daily time frame chart, so this is the daily time frame chart of the Germany 30. So since the low of 19th of July and the current all-time high that is being made on 9 October, it has been trading in a very messy sideways range configuration, and this sideways range configuration could potentially take on the form of a ascending triangle. Same high, but higher low, right? 19th of June, 17th of September, higher 19th of June, and also this bullish dragonfly doji candlestick that has been formed after the test on the 200-day moving average on the week of 7th of November over here, shape a higher low, right? So potentially it could be in a messy ascending medium-term ascending triangle range configuration, and right now last Friday and Thursday sell-off is coming very close to the lower limit of this ascending triangle range configuration, with the 200-day moving average coming in at 23,450 and also confluencing with the ascending triangle range configuration lower limit as well, but this ascending trendline support that is at 23,450, linking up from the low since 19th of June. So let's go to the hourly chart again over here. So on the hourly chart, I will use last Friday as my close to last Friday low, 23,600 as my short-term pivotal support level. Potentially looking for a potential bounce given that the RSI now has started to exit from the oversold zone over here. So two key resistance level to watch on the intraday basis, because since it's still trading within this ascending triangle range configuration, that means on the upside there could be not much momentum unless it could see a potential breakout above the 24,655 level, which is the upper limit of that ongoing medium-term ascending triangle range configuration. So two key resistance level to watch will be at 23,960 and 24,140 for today. If price action managed to surpass above 23,960, potentially it may expose last Friday high US session, last Friday European session high at 24,140. Okay, 24,140, which is so confluence with the 20-day moving average. Only a bearish breakdown below 23,600 will see another dip down to test the medium-term pivotal support level now at 23,450, which is the lower limit of this medium-term ascending triangle range configuration, and so confluence with the key 200-day moving average as well. All right, so that's for the Germany 30. Now, onward next will be the US stock indices, starting with the US Wall Street 30, which representing the Dow Jones Industrial Average. So after surging to a fresh all-time high on Thursday it did a sell-off, and Friday it managed to bounce and shape a higher low over here. So with that, I'll be using 49,950 as my short-term pivotal support for today, looking for a potential recovery again on today, given that the RSI managed to exit from the oversold region and has yet to hit the overbought level. But first resistance level to watch will be at this zone over here. Okay, can put it a zone which is close to last Friday high, 43,330 / 47,500. Okay, so that should be the first resistance level to watch out for today. 47,330. Let me put it in writing. Okay, 330, pardon me, 47,500. All right, so this will be the first resistance zone to watch. Only a breakout above 47,500 will see a much more pronounced bullish reversal scenario occurring on the minor time scale to challenge the next intermediate resistance level at 47,750 next on the US Wall Street 30. However, a bearish breakdown below 46,950 will negate today's bullish reversal scenario to see a further slide to challenge the medium-term pivotal support level, which is also confluencing with the 50-day moving average at 46,740 / 46,575, and also confluence with this ongoing minor ascending channel from the low of 13th of October. Right, so that's for the US Wall Street 30. Next up will be the S&P 500. So on the S&P 500, it came down, challenged the 50-day moving average before bouncing back up over here again. All right, over here, and the RSI also managed to exit from the sold level, and on last Friday, it managed to stage this bullish breakout over here, and has yet hit the overbought region so far. Okay, so with that, there will be a first support level to watch for today, which is this level here. Oops, sorry, I put it in green. Okay, which is very close to the 50-day moving average after the challenge of it, the intraday basis on last Friday, which is at 6,720. All right, also very close to last Friday, today's Asia session low as well. All right, today's Asia session low, 6,720. So with that, the medium-term pivotal support level, which it actually which has been formed after the test on the previous Friday, 7th of November, and last Friday, 14th of November, 6,670, 6,645, and also if you look at the channel, it's also confluence with the minor ascending channel from the low of 10th of October as well over here. So with that, first support level to watch 6,720. Key support level, which is for today, which is a medium-term pivotal support, 6,660, 6,645, still maintain that ongoing bullish bias. Two key resistance level on the intraday basis, 6,780 followed by 6,820. So 6,820 confluence with the 20-day moving average. Only a bearish breakdown below 6,660, 6,645 will invalidate this bullish reversal scenario to see further weakness on the SPX 500 towards 6,605. A breakdown below 6,605 may potentially see a further slide to retest the 17th of October minor swing low at 6,540. All right, so that's for the S&P. Lastly will be the Nasdaq 100. So the Nasdaq 100 movement is also very similar to S&P, challenge the 20-day, the 50-day moving average, form a identical minor swing low that managed to survive at a similar low on the previous Friday, 7th of November. So that gives me a medium-term pivotal support level that has been formed slightly below the 50-day moving average at 24,635 over here. So first support level to watch will be at 24,935, which is the 50-day moving average right now, and also very close to today's Asia session low over here. First resistance level 25,430 to watch out for. 25,430. Only a breakout above 25,430 will see a much more pronounced bullish reversal scenario occurring towards 25,800 level, where previously this resistance is rather important because of the last recovery that take shape on the 7th of November can't surpass 25,800, which is also previously the congestion area over here of 31st of October before kick-starting this we call it rather choppy minor corrective wave formation that has taken shape on Nasdaq 100. So in order for the boost to gain much more traction, it got to clearly break above 25,800. So these are the two key resistance levels to watch in the near term for now. However, a bearish breakdown below 24,635 will invalidate this bullish reversal potential scenario to see further weakness on the Nasdaq 100, exposing the next two intermediate support level at 24,270 and the all important 24,000 figure level, which is the minor swing low of 10th of October that has been induced by that US President Trump tariff tantrum, where he threatened to impose additional 100% tariffs on China products heading to the US at that point in time. All right, so that sum up all the intraday technical outlook on the major stock indices. Now let us now focus our attention on the commodities market, starting with Gold XAU/USD. So for Gold XAU/USD, despite this bounce that has taken shape from the low of 28th of October and 5th of November, but because of that weekly time frame chart, which I share you guys, that it formed a bearish weekly shooting star last week due to last Friday's sell-off. I'm not so convinced that this bounce can continue to maintain its upside momentum for now. So going to the intraday chart of gold over here, I'll be using this bearish breakdown trigger point that created this steep sell-off on last Friday, 4,155. So that will be my short-term pivotal resistance level to have a bearish bias view for today. A breakdown below 4,036, which is the low of last Friday, potentially see further weakness in first step towards 3,980. All right, a breakdown below 3,980 may expose 3,895 and 3,864, which confluence with the 50-day moving average as well. Only a bullish breakout above 4,155 potentially see a recovery for a push up towards 4,203, followed by 4,267, which is the 76.4% Fibo retracement of that previous sell-off. From here, from the all-time high to from the 20th of October all-time high to the low of 28th of October. So that is the 76.4% Fibo retracement at 4267. So for now, I'm watching 4,155 as my short-term pivotal resistance level, having a bearish bias with first support level to watch 4,062, 4,036. A breakdown below 4,036 may expose further weakness towards 3,980. So that's for Gold XAU/USD. Now, lastly will be the West Texas crude oil. So West Texas crude oil, if you look at the daily time frame chart, it continues to trade in a lackluster fashion, trading below the 50-day moving average that it can't break out since the challenge of it on 26th of September, challenge again on the 24th of October, and try to challenge again on last Tuesday before selling off and trading right below the 20-day moving average, indicating the lack of bullish momentum on the gold chart, on the West Texas crude oil chart, pardon me, on the West Texas crude oil chart as seen on the daily time frame. So with the daily time frame showing much more honest towards the bears than the bulls, I will still maintain that bearish bias on the West Texas crude oil on a very short-term intraday basis, with a slightly adjusted downward pivotal resistance level that confluence with last week high or last Wednesday minor swing high that lead to the sell-off, and also a confluence with the 50-day moving average as well at 6130/6170. So this will be my adjusted short-term pivotal resistance level, 6130/6170. Still maintain that bearish, we call it bias on the West Texas crude oil. First resistance level will be at 6040, and first support level will be at 5870 over here. Can I put it down? 5870. Okay, so this will be 5870. So only a breakdown below 5870 may expose further weakness to challenge the next intermediate support level at 5790, which is the congestion area here of 17th of October and 22nd of October. All right, only a bullish breakout above 6130/70 will invalidate today's bearish bias on the West Texas oil to see a squeeze up to revisit the 24th of October minus swing high at the 63 figure level. All right, so that sum up all the intraday technical outlook on all the broad-based cross asset classes ranging for the FX, major stock indices, and as well as the two commodities market. Let us now turn our attention to the key economic data / events to look out for today. So if you look at the economic calendar for today, today will be a rather quiet session on Monday. Very quickly, let me go through. So on Monday, if you look at the European session, no key data to take note of except for a ECB official speech by ECB Gundos. He'll be speaking at 4:15 p.m. That could potentially influence the euro dollar and the euro crosses. And heading into the US session, there's no key US session data release as well. So if for those who have interest in the dollar CAD and the CAD crosses at 9:30 p.m. Singapore time, we have Canada inflation rate data that will be out over here. Then that should sum up the key economic data release. But before we go, there are a couple of Federal Reserve officials speaking at 10 p.m. and 10:30 p.m. Fed Williams and Fed Jefferson. So potentially that could they could also sway the pricing odds of the up and coming December Federal Reserve decision, where market participant now has kind of significantly skewed down a third interest rate cut for this year by looking at the Fed Watch 2, which showing only a 46% chance. All right, over here. So that sum up today's daily dose of market insights. Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.